Residential sales comparison and income approaches, page 194. Mortgage debt and equity components separately to produce an indication of the overall capitalization rate, or the symbol is a capital R with a little zero or an O that's like going through the line underneath it, halfway through the line. This band of investment technique recognizes that most investors use a combination of debt and equity when acquiring an investment. As an explanation of debt, when an investor purchases an investment property, the lender is expecting a return on the money lent in the investment. This is called the mortgage capitalization rate, or the symbol is a capital R with a little m going through the line. The investor, on the other hand, is usually making some type of initial investment in the purchase, very often in the form of a cash down payment. The investor expects a return on that investment. That expectation is related heavily to the risk involved with the investment. What other investments would have paid him, and what income he should realize in this investment. The capitalization rate applied to the expectation of return on equity is known as the equity capitalization rate, or it's the symbol of a capital R with a little e going through the line. Thus, the overall capitalization rate, capital R with a little O, is comprised of the weighted average of two components, capital R with a little m and capital R with a little e. Here's the formula. M times capital RM, which is mortgage capitalization rate. Let me grab a pen so I can write that shit down real quick. Mortgage capitalization rate plus 1 minus M. I'm guessing M is just straight up mortgage. IVR. I don't see the symbol for M. Operating expenses. I don't know. Anyways, we got to figure out what that symbol is. It's either mortgage or something else, like multiplier maybe, times capital RE, which is equity cap rate, equals RO, which is the overall cap rate. That's the formula. So we need to figure out what that M was. It's either multiplier maybe or mortgage. I'm leaning towards mortgage, probably like a price of a comp or something. So whatever the mortgage is, you multiply that by a rate, because that's usually what we're doing. And if it was a multiplier, it probably would have been here, because this is a multiplier. Plus whatever 1 minus the mortgage is, multiply that by the equity cap rate equals your overall cap rate. Calculating the mortgage component. Mortgage cap rate should not be confused with the mortgage interest rate. Although the interest rate being charged to the investor by the lender is a component remotely used in developing the mortgage cap rate. The information needed to derive the mortgage component is loan-to-value ratio, LTV, also referred to as M. Oh, okay, so that's the answer to this question that we have. LTV, loan-to-value, that's what that M symbol is. So up here, we're looking at loan-to-value, multiply by the mortgage cap rate, plus whatever 1 minus the loan to value is here, whatever that comes to, multiply that by the equity cap rate. That'll equal your overall cap rate. Mortgage constant means the ratio between annual debt service and loan principal. Assuming a purchase transaction of an investment property, loan to value is the percent of the purchase price that is financed. The mortgage constant is the ratio of annual debt service to the dollar amount financed. For example, an investor is purchasing an investment property for $450,000. He has acquired a 30-year mortgage at 7.75% interest rate from a local bank for 70% of the purchase price. The monthly payment to the bank for principal and interest will be $2,256.70. The investor expects a 12% annual return on his equity portion of the investment. The loan to value, or capital M, is 70% of the purchase price, or it comes to $315,000. And then it says $450,000 times 70%. So let's get our trusty HP12C out. Clear. Form. Enter. Point. Three. Yeah, you got it right. $450,000 times 0.70 equals 315,000. Got it right. Good job. The monthly, we already got that. The monthly payment to the bank is $2,256.70. The annual debt service is $27,080.38. So you take the monthly payment, times it by 12. Therefore, M equals 70%. Loan to value equals 70%, or 0.70. Mortgage constant rate, capital R with an M, equals 0.0860. $27,080.38 divided by $315,000, which was the loan to value, on page 195. The mortgage component is calculated as the mortgage constant times the percent of the mortgage, loan to value, or M. Here we have mortgage capitalization rate. $0.0860 times M, which is your loan to value, 0.70, which was 70%, equals 0.0602. Mortgage component is calculated as the mortgage constant times the percent. Solve this problem using your trusty HP12C calculator. All right, here we go. What do? You always start with CLX. Enter $450,000 for your total mortgage. Press enter. 70%. Press 70 and then the percent. Yep. Just like it says, $315,000 will appear in display. Now press the present value key, which is this one. Now press 7.75. G prefix. Put that in your interest register. It said 0.65 after that. Now press 30. G prefix. And put that in your number register. 360.00 should be displayed. Now press payment. Minus $2,242.22. Ooh, mine's off. Fuck you, dude. This one says minus $2,256.6986 will appear. Mine didn't. Mine was different, but not too damn far off. Now press 12 and then the multiply key. Mine says minus $26,906.61. This one has minus $27,080.38. I wonder if I had stuff in my registers, man, that might have thrown this off a bit, because I didn't clear out my registers before doing it. 26,906, 26,906.61. Now press CHS. What that did was I took out the minus. After pressing CHS, it means changes the sign in the display from a negative, optional, which it did. Now press $315,000 and then press divide. $0.09. In this one, it's saying 0.0860, which is the mortgage constant. The symbol is a capital R with a little m. Will appear in the display. I have a different. Now press 70 in the percent. 0.06. 0.0602. That's pretty damn close, man. This one only has a 2. Mine doesn't have that. Will appear in the display. That is your mortgage component. M, which is loan to value, multiplied by your mortgage constant. Calculating the equity component. The equity component represents a ratio of annual equity dividend expected return by the investor to the amount of the equity investment, the percent of down payment or percent of initial equity investment, which is signified by the value or purchase price minus the mortgage, or 1 minus M. The calculation is fairly simple. Equity investment, that's what that symbol means. One. Shut up, cat. Equity investment, that's what that is over here. Equity investment equals 30% or 0.30. Now, 100% minus 70% mortgage position. Equity dividend is, the symbol is a capital R with a little e, equals 12% or 0.12. The equity component is calculated as the equity dividend times the equity investment. Equity dividend which is 0.12 times the equity investment, (0.30) equals 0.0360. Calculating the RO. What was the RO? I think it was the overall capitalization rate. Overall cap rate. Yeah. The symbol RO is overall capitalization rate. Is simply the weighted average of RM, which is the mortgage capitalization rate, plus the weighted average of RE, equity dividend. 0.0602. What was M? M is loan to value, 0.70, 70%, times RM, which is should not be confused mortgage interest rate. Mortgage cap rate is RM. Plus 0.0360. And then you have a bracket here. Equity investment is the 1 minus M symbol, or 1-M symbol. 0.30 times RE, which is equity dividend, equals 0.0962 overall cap rate. The overall capitalization rate is our example. In our example is 9.62 because you move the decimal over 2 places to the right. Which is, I don't know why it doesn't say that after all this shit. Go 1, 2, 9.62%. The band of investment technique, similar to the market data technique, requires quality data from the market. However, in this case, the appraiser must be particularly knowledgeable of current market investment rates and financing options from the lender's perspective, as well as what return on equity represents the typical investor's expectation.